Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 11th of April until the 15th. Now before we dive into the webinar, one of the key highlights was the fact that shortly after Elon Musk acquired a 9.1% stake in Twitter last week, this week he launched a bid to acquire 100% of the company at $54.20 per share, which values Twitter at $41 billion. Now, as always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment and trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, as we mentioned during the intro, a stock that is probably one of the most talked about in the stock market right now is the one of Twitter. As we said, Elon Musk essentially last week he announced that he would be acquiring a 9.1% stake in the company. However, what nobody probably expected was the fact that Elon Musk would come this week and announce that he'd be offering to acquire the full company instead. Now, the deal, of course, it has not materialized yet, and other members of the board of directors of Twitter, they have already expressed a rejection towards Elon's offer. But of course, whether the deal actually materializes or not, the fact is that Twitter is such a hot topic now, which means that it's seeing an increased volume and volatility as well. As we can see from the chart itself, Twitter's share price jumped by more than 5%, which is here, on the day following the announcement that Twitter would be offering to buy 100% of Twitter. However, after the dust settled and people started realizing that this is a deal that probably is not going to take place, given the outright rejections that some members of the board put forward, the share price of Twitter fell down and actually finished the day lower and in the red by 1.68%. This is a weekly time frame, but if I switch on the daily time frame, you'll see here that basically this was the day following after the announcement of Elon Musk that he'd be offering to acquire 100% of Twitter. So you can see the close was here. We gapped up higher and opened right up here, which was like more or less a 5% gap up. But towards the end of the day, we finished lower, and we can see it pretty much gave all of the gains and then some as it finished lower by 1.68%. Again, the offer of Elon Musk was to buy Twitter with the share price of $54.20, which is clearly sitting at a premium from the current market price. However, if we zoom out a little bit, we can see that Twitter, it had actually reached the level that basically Elon is offering, and even higher when it reached all the way back in, it was, let's see here, July 2021, when it reached a high of close to $71. So yeah, a few weeks are going to be interesting to see with regards to what happens with regards to Twitter. But again, the overall consensus is that the deal is not really going to materialize. Next up, moving on to FX, the US dollar continued its advance during the week last week, despite the fact that inflation is currently sitting at 40-year highs in the US, currently at a rate of 8.5%. Now this potentially means that the Fed will likely employ an even more aggressive rate hike cycle, which in turn could be one of the factors that boosted the dollar throughout the week. If we scroll through the rest of the major pairs as well, which we're going to, we'll see that they were all pretty much down against the US dollar during the week, aside from the pound dollar. Now, the most notable ones were the US dollar and Swiss franc, as well as the US dollar and Japanese yen. The former, if I just pull up the chart here, we'll see that it advanced by 1.56% on 144 pips. If I just switch these on the weekly, you'll see it was pretty much 4 days consecutive in the green, which was the rise up here. We can see it is trending upwards, although it's more of like a slow moving trend. We're currently sitting at these levels, these resistance levels right here. But yeah, it had a pretty strong week overall last week, the dollar Swiss franc. And also we mentioned the US dollar Japanese yen as well, which saw an even greater increase. This one, like we said, it rose by 2.05% or 254 pips on the week. And we can see pretty much from the chart as well that this was the US dollar Japanese yen's 6th consecutive week in the green. So overall, we can see it's gained quite a lot. Depending on what happens with the interest rate announcements in the US, we could potentially see a further increase in the strength of the dollar, and hence a further increase in the exchange rate of the US dollar and Japanese yen. And next up, looking at some of the commodities. First, we're going to be covering US oil. Now, the commodity, it rose by more than 6% on the week, or almost $6 per barrel, crossing above, as we can see here, crossed above the $100 mark yet again. It came off the back of reports that the EU is considering plans to fully ban imports of Russian crude. Now, the impact of the report was even more pronounced, as this was something that, if you remember, the EU had previously opposed due to the fears that it would drive oil prices steeply upwards, which, as we can see, it did. However, as we can see, they are reconsidering the plans to actually go ahead with the embargo. And as we said, the impact was clearly seen on the prices of oil, which again, they have now crossed above the $100 mark, sitting at $105 ahead of Friday's close. We could see potentially what happens in the coming week, because obviously these were reports, but it hasn't been fully announced that this is going to take place. But we could potentially see a retest back up to the highs of 124. Meanwhile, switching on to gold. Gold posted its second consecutive weekly gain at the close on Friday. We obviously have the ongoing conflict in Ukraine, as well as the inflationary pressures across the globe, with the appeal of the safe haven asset becoming boosted yet again as a result. Now, during the week, last week, US President Joe Biden also announced that they'll be giving an additional $800 million in military assistance to Ukraine, which pretty much only shows that the war is far from over due to the additional military aid that is requested by Ukraine. Currently, to be honest, the only headwind that I can see for gold is the rise in interest rates in the US. As we all know, gold is not yield bearing, meaning it doesn't return any interest. So if we see a steep increase in the interest rates of the US dollars, it might appeal to investors, which we could see them being driven off of gold and going back on to hold US dollar. But until then, gold we can see still now trading at 1,973, so it's nearing the $2,000 mark, which acts as a pretty strong resistance, as we can see here in the past, where it crossed above it, but then it stably rejected off of that level and closed back down below it. So yeah, we can see in the coming weeks what will be happening with regards to that, but overall in the week it was up by 1.42%, or $27.70, and again, this was the second consecutive weekly gain. And yeah, there you have it. This as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Till then, trade safe.